Very good afternoon, everyone. Welcome to yet another uLaw webinar. And today's topic, we're going to be talking about disbursements demystified, so the do's and don'ts of managing client expenses. A quick housekeeping, we kindly request you to use our chat window to ask any questions. And yes, this session is accredited for 1 hour of professionalism CPD credits by the Law Society of Upper Canada. And by the end of the month of June, we hope to have this available for some of the other provinces, including British Columbia, as well as the Atlantic provinces. But today, this CPD session has been approved for 1 hour of professionalism hours for the Law Society of Upper Canada. Okay. All right. So it is a full house, and very excited to present the CPD session today. I am joined by my support staff from uLaw, and we're happy to present this to our audience, and kindly do use our chat window to ask any questions that you may have either during the session, or you can wait till we have our Q&A, which we plan to have at the end of the session. And I kindly request you to participate in our survey as to how we can make the sessions better, newer topics that we can ask for credits as well as present to you to make this learning process much more effective. Like every other uLaw webinar, today's webinar also has an agenda. It's very important. And we're going to be talking today about disbursements. What are disbursements? How do we manage them as legal professionals? Or how do you manage them as legal professionals? The different types of accounts that you could use to use and manage and disperse those expenses. And that, let's say that's trust in general. Ask the question, why not do it through trust all the time? What are the benefits? What are the reasons why people do it otherwise? Obviously, you are a better judge how you want to incorporate that into your firm. But we're going to talk about all those different aspects of the disbursements. How do you manage disbursements from general accounts? That could be your bank account, your business credit card. I'm sure if you have one. If you don't, it's a great idea to have one so that you can streamline that whole process of managing disbursements and expenses. And another common general account would be your owner's pocket. So if that's your own money that you're using to sometime spend on behalf of these disbursements, how do you use that? How do you capture it? How do you get the money back, right? So all these are very important as we covered today. Then we're going to cover the types of general disbursements. We have some examples that we've used to outline, to use it as an agenda. So right from your billable to your unit rate, such as fax, you have mileage. Travel time is a very common, often used type of disbursement, especially if you're traveling from, let's say, one city to another for a court. We're going to highlight recovery of expenses. So let's say you paid for it, how do you recover it back from your client? As well as consultancy work. So let's say you outsourced a component of your legal work to a third-party legal firm. How do you represent it and how do you recover it? So those are kind of the top 6 or 7 different types of general disbursements that we're going to be talking about and covering, just as an example. Finally, before we end the presentation, we also want to talk about the expectations from the Law Society when it comes to the documents and reports that are expected out of you as a legal professional and how you represent the different transactions that have happened across those disbursements. Okay? So it's going to be kind of a packed session, if you will. And for the purposes of illustrating this, again, didn't want to keep it too presentation mode, just to highlight this to everybody, but just to use the software uLaw, I think, to highlight the components and how they're better represented in reports. I'm going to use the first 15-20 minutes to cover my slides and jump back and forth between my slides and the actual demo. And I want to ensure that there's a disclaimer that this is in no way showcasing uLaw, but it's purely to showcase how a software, a legal accounting software such as uLaw, can be used to make this much more streamlined and easy to understand. Okay, so let's start with a basic definition of what is a disbursement and what does that mean to my business. So the wiki definition for disbursement is the act of paying out or disbursing money, such as money that's being paid out to run your business, expenditures, payments, etc. So in a layman's terms, so let's say that a disbursement is the expense that you've incurred for your client by your legal firm office. Okay, that's a layman's explanation of that. The accounting term, which is very important to note because every practice management touch point in the legal world has an accounting touch point. So the accounting term is you need to record it in your books so that you can balance your accounts when you spend it, invoice it, and recover it. Okay? So we've kind of looked at the wiki definition, kind of a very layman's definition, and that's everything we like you take back. What is a disbursement? It's an expense that's incurred for your client by your law office. We're going to now talk about the accounting touch points, the ledgers, the journals that need to be represented one step at a time. Moving on, how do you manage these disbursements? Okay, so one, we've kind of defined what these are. These are expenses that are incurred as you create a file and walk through the matter life cycle for each client. The big question is, how do you manage them? And what does it take to manage these disbursements? So one of the most fundamental aspects of disbursement management is to be able to record these disbursements and the different nomenclatures that go along with the definition of that disbursement. Okay, so if you want to expand on it, you want to record the disbursement, how much was paid, how was it paid, when was it paid, and what was the reason and the client for whom it was paid, right? So those components define that disbursement transaction. So it's not just the amount. It's important to capture the date. It's important to capture the amount, and definitely the client for whom that expense was incurred, and if possible, go the extra mile to capture the reason. Okay, was it an application fee? Was it a court fee? And when you create a file, obviously you're creating it obviously for a client, and you have a matter or a file that's associated with that client. It would be even better if you were to associate that disbursement with that specific matter. Then it's much more easier for you to search for it and record it, transact it, as well as measure it, and finally report it, which is the top 4 things that you need to do as a legal professional. And there are 2 options that you have when it comes to managing your disbursements. Okay, now you can manage your disbursements or render these expenses directly out of your trust account. If you are in the habit, and if your business is in the habit of accepting retainers, money into trust, then it's a great habit. You know, it's one of those good habits that you can actually transact and manage these disbursements directly from trust. It's a simple in and out process. The other way that you can actually manage disbursements or expenses on behalf of your client is by using your general account. Now, the subtle difference, but important enough, is when you transact and you use your general disbursement, there are a few additional steps that you need to take as the legal professional to recover that expense. Okay? When you transact out of trust, let's say you have a $100 retainer and you've just done a $50 application fee, that money is drawn right out of your trust account. Okay? Both in the bookkeeping software, more importantly in the bookkeeping software. So we're talking about the bookkeeping aspect of it. In real life, obviously the bookkeeping follows real life. So we're assuming that's what happened in real life. But if you are actually, let's say there's no retainer, okay, and there's that $50 application fee, and now you're paying for it using that general account. Now, a couple of slides back, we looked at those different types of general accounts. So you could have used your general bank account, which is for your legal firm. So you could have actually written a check for the application fee. The other option is you using a business credit card. So you may have used your credit card, your business credit card, to pay for it. The third option we looked at was you actually paying cash. Obviously, certain fees, there are certain boundaries that restrict how you pay for it. For example, a court fee, I would think there's a traditional method of writing a check or maybe sometimes paying through a credit card. There's certain fees that you don't have to pay by cash, but let's say you did pay by cash for a certain type of fee, it's still a disbursement, but that's your cash, either coming out of your owner's pocket or your cash account. Regardless, the extra steps that you need to take in recovering that expense is by step one, invoicing that client. Once you've disbursed this client, as part of you representing the work that's been done, a disbursement is something that you report through the invoice to your client, that's the money that you've spent on their behalf. Okay? And after you've invoiced the client, you wait for that payment to come in. So the additional steps in general is that you need to now track it. You got to document it just like how you did for your trust. But the two additional steps are invoicing the client and getting that payment. Okay, so here comes the next question. So that's going to lead me to have to do more work. Why not spend it out of my trust to begin with, right? So that's the big question. Why not pay straight from trust and keep it simple? Fantastic. I think if you wanted to keep it simple, then a lot of things have to change within your firm. You have to have the discipline that you will collect that retainer as part of your business transaction, because you as a law firm may or may not have a trust account. But to collect or disperse out of trust, you obviously need to have that trust account. Make it a point to have a really good collateral, either in terms of a retainer document that outlines the amount of retainer that you would receive. Make it clear within that retainer document the different expenses that you believe that you would incur and the different rates for those different types of expenses if you incur them. Okay? There are certain billable that are just by the books. There are certain, like the travel mileage, the fax, the postage, that are things that you determined as your law firm's fees to your end client. So determining and documenting it and getting it signed off as part of that retainer agreement becomes very important and a prerequisite to keep it simple. Now that you have that trust account, it's great that you can collect that retainer, but ensure that you keep in your mind as you work through your expense and work through your revenue, the component of the retainer will have to now be divvied up for expenses. So let's say it's a $500 retainer. You mentally have to think, and software can help you divvy it up as $300 as your expense and $200 as the expense on client amounts, which is recoverable, but it's really not revenue. It's just in and out, right out to trust, right? And the most important aspect to keeping it simple is that at the end of the day, this reduces the number of accounting touch points that is required out of you. And that means the amount of bookkeeping that is required out of you. Okay, there's no additional steps of invoicing and drawing ledgers for general, ensuring that you collect the payment, because another hassle. Okay, why do still people not do it? One of the common surveys that we've had, and one of the example as to why someone does it out of a general account, is convenience. Okay, let's say you collect points of that business credit card that you're using, Aeroplan points, Air Miles, whatever it is. Now you are able to use your own business credit card to transact for all those transactions. So that's coming out of your general. So one of the most popular aspects is the convenience of using the card or your monetary transaction to pay for it. Yes, it does lead to an extra couple of steps, but that's the bargain that you've settled down for. Okay, so reiterating what a disbursement is, in a layman's term, it's the expense that you incur for your client. We've now talked about the two different types of how you can disperse, the accounts that you use to disperse. One is your trust account, using your trust account to disperse directly out of your trust, So that's kind of in and out. Or you could use your general account where you disperse out of general, pay for it in advance, raise an invoice, ensure the disbursement is laid out in that invoice so that your client knows that that's what he needs to pay or she needs to pay you, and then recover that expense through that payment. Okay? So that's exactly what we've highlighted in this presentation right here. Before you raise that invoice, record that expense information with all the particulars that we discussed earlier. Right from the date, the amount, the reason, the client, and the method. And the sixth most important, and this is a variable component, is the appropriate tax. Now, there are certain disbursements that are tax exempt, and there are certain that are discretionary to you. Okay? So you want to keep in mind as you disperse, regardless of where you do it from, trust or general, keep in mind those appropriate taxes that are governed for those specific types of disbursements. And a third component, or a second variable component, and that would probably be the last variable component, is whether there's a markup or a markdown on those expenses that you're raising to your client. So let's take a pause just to reflect on what that means. What is a markup or a markdown on a disbursement? So let's take an example of any software that you have to use to actually facilitate that legal work that you do for your client. So a good example that comes to mind is DivorceMate. Again, for certain silos of practice, it's not necessary. It's a family law, but I'm just going to use that as an example. So let's say you have DivorceMate, and you are able to negotiate, and let's say you have negotiated bulk pricing for that DivorceMate software. So you have now 5 licenses, because certain software are licensed by individual licenses, some will be otherwise. So let's say you've purchased 5 licenses, each at about $100 a piece, a pop, right? So that's you incurring $500 of office expense. Now you want to disperse that to your client because each of your client that you work on a file, there is a DivorceMate license that's involved. And we're going to talk about this when we do the demo as to how you reflect it. But in terms of the example, now you have the opportunity for those individual clients to mark up that license cost and charge them individually at $120. Maybe DivorceMate gave you a great discount, unless you're a good Samaritan, which I'm sure most of you are as legal professionals. The amount of pro bonos that you do in Ontario, that's kudos to you. But let's say you don't want to give that profit over to your client. You want to keep that profit. You are able to mark that up. Okay? So that's a good example of how you could potentially mark up a specific disbursement. Now let's take another example of the reverse. Let's look at it. Why would you mark down a disbursement? Why would you take a loss? A classic example is, let's say, as part of you winning that case, and for some reason, that court date didn't work out, and it's a different city to which you need to travel to. And you've come across this often. And let's say you need to use the consultancy services of another legal firm who needs to represent you at that other city. So you're in Toronto, for some reason the court has been scheduled in Ottawa, you need a legal representation there. But you've agreed in your retainer letter or in your engagement letter that you're only going to charge you $100, let's say travel time for court visits. But let's say that legal fee, that consultancy just charged you $150. It's not going to be, unless you can, many times you can't. That's a perfect example where you're incurring a $150 expense to engage that outsourced consultancy work, but you're still limited to only charging your client a $100 disbursement. Okay? So those are the components that you want to keep in mind as you start talking about disbursements. So what is a disbursement? It's a layman's way of saying it's an expense that you incur on behalf of your client. And you can disperse either using your trust account or your general account. And when you record that expense and you record that disbursements, you want to keep in mind the top 5 components that define a disbursement. When did you receive that? Or when did you incur it? Sorry. How much was the amount? How did you pay for it? Who's the client? What's the purpose? And the two variable components are what is the tax that's associated with that expense or disbursement, and if there is a markup or a markdown that you have negotiated for that particular expense. Now let's come to our next slide where we wanted to talk about the different types of disbursements. Okay? And we've tried to outline as a best practice the ones that can be managed both from trust and general, and the ones that can only be managed through general accounts. Okay, this again goes back to trust compliance and the discipline that you build around your law firm. So let's look at the first one, a billable type of a disbursement. So a court fee is a perfect example. Let's say it's $150 or $325, depending on the type of area of practice. The court fee differs, and you are able to pay that court fee both out of your trust and general. Because the court fee is $150, you're not marking that court fee fees. Okay, you're charging your client exactly that $150. Here's a great example of a court fee where I think it is tax exempt. And if it is, you make it tax exempt for your client, right? And you can write that both out of your trust and general. So you may write yourself a trust check to the court, or it could be an application fee where you're writing a trust check to the Ministry of Finance. So yeah, a court fee is a perfect billable example, and let's go over it as to how you would represent it one at a time. Now is the time when I'm actually going to be shifting between my presentation and actually showing an example, because you don't want it to be overly black and red for a Friday afternoon. Okay. So I'm going to be using, for the purposes of demonstrating disbursements and the value of that, by shifting into a playground account that we use within uLaw. Okay? So let me first off create a client. So it's simpler that we can start afresh using a client, create a matter, and work through that matter. I'm going to say Dr. Jordan, because the Law Society does ask for an address. Let's quickly have that pre-filled. We'll make that as the mailing address. In fact, I'll say it was through a client referral, which is a great way of capturing how Roger Jordan got to know us. Okay. Now let me go ahead and create a matter so that there's a file. As I said, the disbursement is then made specific for a client. And if you can make it even more specific for a file or a matter, because you may have multiple files for the same individual. Let's go ahead and create that matter for Mr. Roger Jordan. Well, thank you for that fantastic name. I probably would use it in my next demo. But thank you for that name. It was actually a suggestion made by one of our participants. All right. So let me go ahead and say that it's a defense issue. Make that a small claims. Okay, keep it simple. Keep in mind, this could be, the different disbursements differ, based on the area of practice, right? Let's go ahead and let's assume that you're now in the habit of building this retainer. We'll kind of look at both those examples. Let's assume for the purposes of this particular demonstration and this use case, we're actually going to input a retainer for Mr. Rogers. So let's go ahead. And we looked at the different components that we need to capture. right, for every transaction. Let me say on the 22nd, I received $600, and you could have received it, the method. So we talk about how did you receive it. Got the date, the amount. There are multiple options. You could have received it in cash. Then there are certain trust rules that govern that you need to deposit that cash trust amount into your trust account within 24 hours. Or you could have just got a check. Here are your different options. Let's make it easy and, convenient by just saying he gave us a check. And that's the check number. So now you've captured how that individual paid for you and further particular as a reference. That gets deposited, obviously, to your trust account. It's always a great habit to provide a trust receipt or a retainer receipt, if you will. Okay? So now that we have the $600, we're not going to concentrate on the receipt. It's a great habit to provide it, though. We want to focus on the disbursements. Assuming that we have the $600 in the retainer, let's take the first example that we looked at, which was disbursing using a trust account. So let's say I'm paying out of trust. Okay? The same components. When did it happen? The amount. So let's say it's $80. How did you pay for it? So let's say it's a trust check. So that's a 345. Can you tell me what it is for? Okay, because you want to capture that as well. Application fee. And who did you pay to? Mr. Finance, and it came out of my trust account. I may even be able to print that check. But it's really important to note that this is money that's coming or leaving your trust account directly. Okay? If you notice, the trust receipt would now decrease by that $80, reflecting $520. So you did not have to raise an invoice, you didn't have to collect the payments, or you didn't have to do any trust transfers. It was just money in trust, out of trust. That's how you disperse it. And we're going to later talk about how that's captured in the journals and the documentation and the reports that the Law Society would like you to report as part of your audit, spot audit, whatever. Okay? So first transaction, going back to our presentation, we've kind of captured the disbursement that's been made from trust. Okay? How was paid? Who was it paid for? The reason. We've captured all of that. Now let's look at our next example. Apologize. So we looked at a billable, which is an application fee in this regard, and I just transacted out of my trust. Now let's look at an example of maybe a court fee that now I'm going to be doing out of general. So we'll kind of mix and match that so you have a better understanding of it. Same thing. I'm going to disperse an expense. This time, instead of trust, I'm going to do it out of general. And let's say it is the court fee. Further explanation of the description and amount. So let's go ahead and say that it's $150 and that's exempt tax for this particular expense, right? So this was one of those variable components that we spoke about, that a disbursement may have a tax, may not have a tax associated with it. And now let's talk about how you paid for it. So let's say you paid the Ministry of Finance, or let me say Ministry of Attorney General, or the courthouse, whoever it is that you're paying it for. Now here comes the different options we spoke about when you disperse out of your general account. Okay, so you may have paid out of your general account. You may have paid out of your credit card, your business credit card, some other credit cards that you may have, or you may have paid it out of your owner's pocket. Even further, someone else in your law firm could have actually paid for it, where then you owe the money. Okay, so there's many different transaction possibilities based on what really happened in real life that day. Let's assume that you did pay out of your general account. And let's say you wrote a general check, and we'll call it 567. So now you've had 2 disbursements, and for the variety of it, you have one coming directly out of trust, and there's one that just came out of general. Okay? Now that money of $150 that you expensed, you've still not raised an invoice. Because only when you raise that invoice and recover that expense are you able to do that. You have to first raise that invoice. We're not doing that yet, but let's go back to the presentation. Another type of disbursement is a unit rate. Okay, this is a great example of either the postage or, let's say, a fax. Let's say, in certain cases, there's a lot of faxes involved that you need to send out. So let's maybe consider fax as a fantastic example of a general disbursement, which is a unit rate disbursement. And let's say that it's a fax. Even better, after billable, let's say it's mileage, it's fax, and I'm going to say 50 at $1. So these are things that you determine as part of your retainer letter or your engagement letter with your client. How much do you plan on charging them per fax? Okay. It's probably not tax exempt, right? So you probably want to charge them tax for it. And the bottom part, obviously, is you telling your business if they're really an expense. Your fax machine seems to work just fine. There's really no expense. If there was, you can expense it as well. But let's go ahead and disperse that unit rate disbursement. You notice as you continue down to expense and add those disbursements, your projected balance of your trust keeps dropping. It's only projected. You still haven't raised an invoice. And it's not going to reflect on your ledgers yet. The next example we want to look at is mileage, coming out of your general account as well. Same concept. Paying it from general. Travel mileage. The different components that define that disbursement is what's important, and that's what we're trying to kind of drive the point. These are all disbursements. These are all coming out of either trust or general, but they, depending on the type of disbursement, the characteristics that define that disbursement differ. Okay? And how easy it is to reflect on it on a ledger is fundamentally is what the soul searching is about. How can you, as a legal professional, through the use of software in today's context, make this easier? But fundamentally, it's important for you to know all the components that go behind the scene, whether you do it through a software or you do it manually using an Excel sheet, right? So let's say you traveled 100 kilometers. You define what that rate is. You define whether you want to charge 55 cents a kilometer or you want to charge 75 cents a kilometer. Okay, so you determine that on a case-to-case basis. You decide whether you want to charge tax or not. If you filled gas that one particular day at Petro-Canada and you want to expense your business account, you do that too. Maybe you paid it out of your business credit card. That's a characteristic of that particular disbursements transaction. You measure it, you track it, and nothing better than doing it as and when it happens. Okay? So let's continue down that path. There's really a method to this whole madness, trust me. So we've looked at billable going out of trust in general. We've looked at unit rate as a fax coming out of general. We've looked at mileage now for a travel mileage. Travel time. This is a very interesting disbursement because you don't have to do it every time. It's sometimes when you have to go out of the city, so it's a variable component in itself. You can have an assistant travel time. You can really define who traveled. Now, the characteristics of this particular disbursement is different, right? Now you're capturing the actual duration. You're not capturing the cost. You're not capturing a unit rate. You're actually capturing time. You say, I spent 4 hours on that car on that hot day, and I'm going to charge you whatever is the rate that you've agreed upon. For the purposes of this demo, let's say it's 100. Purpose of this demo, I say let's do 1 hour or 2 hours. Okay. Let me report that expense. Now, none of this is money that you've still made. Anything that's touching general, you still haven't made it. Keep in mind that you've still not raised an invoice, and that's a very important step. And the final, or a couple of things that we want to talk about, we spoke about expense on profit margin or expense with a loss margin, right? We spoke about those two examples of disbursements, one for divorce mate and another example where your outsourced legal service charged you more than what you dispersed your client for. Okay. Let's get a top up on our retainer. And let's roll. Now let me look at the last two examples of the type of disbursements that I want to showcase so that you truly understand the whole 9 yards of how this works. Now let's add a new disbursement coming out of miscellaneous. And I'm going to now say divorce mate, software, and I'm going to charge the client $120, okay? But for that particular transaction, I only paid as a license $100. Now, there are a couple of ways that you can represent this. You can always add the total $500 for the 5 licenses at $100 a pop as an office expense right from the get-go. And if you've done that, you obviously will not report it as part of this transaction. That's another style of how you can do it, but that's a conversation for another day. So let's say you only incurred $100 plus the 13% tax, and you, as a business, paid out of your credit card. So there is a markup of about $20, right? You incurred $113, but you're charging another $20 to your client. So this is an example of how you would actually mark up and make that $20 profit. Okay, we're going to look at how all this is captured in journals and ledgers. And the last example that we want to look at is a consultancy expense. And for the purposes of this presentation, we're assuming that we're actually losing money on this. Okay, so I'm just going to say it's a consultancy expense, third-party court visit. Okay. Let's say you agreed upon $100 to your client, but the consulting services that you used actually charge you $150. Okay. Just going to call it the company Legal Consultancy Services Inc. And let's assume you paid it out of your general account and you wrote them a check for that amount. Keep in mind, this is what's being dispersed to the client, and this is what you paid for it. So the disbursement as a component has two components or two aspects to it. One is what you're actually dispersing your client. The other is whether it's a marked up or a marked down expense. Okay? Because this is expense on behalf of a client that you incurred first because it was a general expense. All right. Now let us do the right thing to do, which is to raise an invoice, because that is how you can recover all that money now you've paid. Okay? Because if this guy were to leave country and you can't find him anymore, this is all money gone down the drain because you've spent it in advance, unless you've got a retainer. In this case, you're smart. You got a retainer. You can raise an invoice and really move the money. But assume you don't have a retainer, that's the situation you will deal with. Let's go ahead, raise an invoice, and mark it as paid because there's still a little bit of money left in the trust account. Go ahead, raise that invoice, which is the right thing to do. This is the legal document that represents not only the legal fees and the work that you've done, but it also represents the expenses and the disbursements that you incurred in dealing with this file. So let's quickly look at that invoice so that we can quickly understand what it's outlined in, and you can have smaller version of invoices, eco-friendly invoices, etc. Okay, you've got your disbursements, you've got your court fee, your fax, lawyer travel mileage, travel time, you've got your marked up expense for divorce mate, you've got your marked down expense for consultancy expenses. Very important. Those are all disbursements coming out of your general account. Okay? We looked at all these different examples coming out of your general account. Always a great discipline and a habit and a best practice, if you will, to componentize your retainer transactions. So you received a $600 retainer, but very important to keep in mind that you disbursed for that particular application fee $80 directly from trust. And then you obviously had another $250 top up off your retainer. Okay? So essentially what you're telling your client through this invoice is, buddy, I'm going to be transferring this amount which you owe me because I've all spent money for this $765 in some shape or form through profits and losses. And that's the money that I'm going to recover. The fact that you have a retainer, how you recover this is by moving that money from your trust account into your general account. The first thing you did was raise these disbursements, these invoices, and the second step was the invoice. And now let's do the logical, the right thing to do, which is the third step. And the third step is by moving that pending trust transfer with the eligible $765.85. Keep in mind, you would obviously do this in real life. You would actually go to a bank. You could do it at the counter. You could have done this as an electronic fund transfer. But keep in mind, all those different disbursements that were in general are what's being accounted for here. You do not see the $80, right? Because that $80 was taken out right out of your trust. These are only the transactions that reflect the expense out of your general account. Adding to that $765.85, moving that from your trust to your general account. And let's say you do an electronic fund transfer. More importantly, in Ontario, you even fill a Form 9A. This is very important to keep in mind. So when you're actually doing, this is one of the, aspects of demystifying disbursements. So yes, it was a disbursement. Yes, it was an or it was an expense on behalf of the client. But do I still need to do a Form 9A? The answer is yes. Because a Form 9A is a formal document and is actually part of your audit requirement that allows you to document every electronic transaction from a trust into a general account. Okay? Because this really outlines and you're vouching for how that money just left trust. Because that's the money that the auditors are looking for, making sure that the trust money is not, faltered. Keep in mind, you have each and every disbursement amount, and you have those two bank accounts. You sign this, you file this, you're good to go. Okay? So let's go back to our example of what we just tried to cover. Disbursements, the different types of disbursements. We looked at coming out of both trust and general, and we looked at how once you've raised it through general, how you raise an invoice, move the eligible trust money from your trust to general, and ensure that if you're doing an electronic fund transfer in the province of Ontario, that you're filling that Form 9A, hopefully as and when it happens. Because if you can somehow bring that into your culture and discipline of doing it as and when it happens, you're going to save yourself a lot of stress, either at the end of the month or when it comes to audit, taxes, whatever. Okay? So now I want to move along my presentation to kind of the last segment with another 10 minutes of time with maybe 5 minutes for Q&A. What are the different documents that the Law Society is looking for? What are the different documents that fundamentally you need to manage and maintain to report all these transactions? So all that happened right now was in real life, you recording those transactions. What we looked at is how do you record those transactions? What are the components that you measure and track and record as part of those transactions? Now it's important, how do you report that now that you've tracked it? And what are the different documents that can give you, I guess, the whole picture of it, right? So ledgers that need to report disbursements, both trust and general, okay? During audit, the disbursement ledgers for both trust and general are certainly reviewed. Okay, it's a given. Every transaction that's been disbursed needs to be recorded, and based on the type of transaction, whether it's a trust or a general, those transactions belong to those ledgers. If it's a trust transaction, so that $80 application fee belongs to a trust ledger. The remaining, that $120 court fee, belongs to the general ledger. And each ledger also has a running balance. Okay? So if I were to quickly expand on it and kind of show you, this is just a quick example out of the bookkeeping guidelines of an example of a lawyer, Leslie, and what her trust ledger looks like and what her general ledger looks like. If I were to focus your attention on the particulars, let's look at everything that captured. Date, what was it for, what was the amount, is there a balance? And more importantly, for which client is it, and what is the matter, or the file. We have captured that during, right from, as a discipline, as to how we did it, we captured all that pieces of information already. You know that, because this, you can directly reflect it to the example that we used. We captured it for the client, Roger Jordan. It was for the file fence issue with Stefan. We've captured the date, the particulars, which particular receipt it was a trust or general, the amount, including the HST, right? Now, how do you report this is the big question. So let's look at the trust and general ledgers. To do that, you can either stay in the matter, and the question mark, again, this is, let me actually focus on the ledger itself. Even better is to generate a report. Let me go to document generation, compliance, client's trust ledger. So the two ledgers, the trust and general, we've got the trust, general payments, and general disbursement for journals. So let's go ahead and do the client's trust general. And I will do it specifically for the purposes of this demonstration for Mr. Roger Jordan. Okay. So very important is for Mr. Roger Jordan, for the matter, for that file number, which is a unique number, we look at the retainer as a receipt. Okay. Apologize. Oh, there you go. For that trust ledger, you have a receipt. Let's look at that retainer example right here. You have a $565 receipt on that particular date. exactly what we have. We have a $600 receipt on that particular date as a retainer. That's the balance in trust. Very important that we've now tracked that disbursement, which was a payout from trust directly, that is considered as an invoice or a disbursement, right? Right here. And that's what they capture here. That's a 565 disbursement. And we capture each and every transfer by itself. If you remember, for each of those expenses that we moved from trust to general, the trust ledger captures that. So these are all that came in, these are all that left. So in that one invoice, we had a $113 court fee. We had the $135.60 fee for divorcement. I believe we had another $226 disbursement. All of that captured, including the $150 that was paid out. Okay? With a balance of $4 that's still left in trust. Now let's look at the general ledger. And now let me look at it specifically for our friend Mr. Roger Jordan. Now this tells you the same data, but a different side of the story. Okay? What it tells you is these were the fees or the expenses on behalf of the client, which is a layman's definition of disbursement. A court fee for $150, the fax for $56.50, and if you do notice, it is broken down by the amount and the tax, which is very important to capture. Okay, because if you run a business that pays HST, that's the HST that you've just collected. All of that, it also highlights all the money that's come in. Okay, so through that trust transfer, money came in from that trust account and got in to your general account, and that's being accounted for as well, giving you a balanced general ledger of $765.85 with no balance in the general. Okay? So hopefully that outlined and kind of demystified a little bit about how you manage disbursements, how you track them, measure them, and finally report them. Now, the big question is that enough? What else are the auditors looking for? We looked at the two ledgers, but an important piece of information that they also want is the journal. And how does the journal differ? We've done this and we've spoken about this in some other sessions of ours in terms of legal, fee management, and expense management. Journals capture some additional information that auditors sometimes need. And that is not only the date, the method, but whether it's a trust or a general receipt, who was it paid to, who's the client, and what was the method of payment to. They want to capture that as well. And in a general disbursement, you want to outline not just the amount, but the HST that was paid. So as the documents that are required are the two ledgers and the three journals. So let's quickly look at those. As journals, let's look at the client's trust receipt. Technically, you're doing it for a period, but for the purposes of this demo, I'm just doing it for an individual client. Okay, very important. The date, where did that money come from? Okay, these were the two, obviously, this has got nothing to do with the disbursement. This is just money coming into the trust, but it's still important that you capture the amount and how you received it. Let's do the trust payments. I can only click on the mouse right. Very important that we've captured the date, the method, paid to, the matter for which it was done, file number, client, and purpose of payment, and this disbursement of $80 that was paid. Captured right here. This was the individual disbursement expense that was moved from trust to general, making the total statement $845.85. Doesn't stop there. The final document that auditor is looking for is a general disbursement. Okay? Let's quickly do that final document, which is called the general disbursement, and I will do it for the month of May. And let's quickly look at what components this document captures. Very important. It captures the expense and splits out the HST. So going by date, I think there's a quick question. If there's any way you can ask for questions after the session is done, by all means, you can send us an email with a convenient time for a conversation. If it's got to be outside the realms of this particular topic, and I can certainly send you the coordinates for that. I'm sending you an email. I apologize for doing that real quick, but let's look at this. So for Roger Jordan, that's the file, $150 and then $19.50 of tax. The court fee, which was tax exempt, was just that. The lawyer travel mileage, $100 plus the 13 tax. Also takes into account the expense that you had as a business, divorce made, and the fact that you paid tables. Okay? Oh, that was for a different client. I apologize, but these are the 4 transactions that we're looking at. So this is your general disbursement ledger. Now for the final set of slides, as a wrap-up, before I can open the lines for any Q&A, now that you know what to do, now comes the aspect of how do you like to do it? Yes, if you had all the time in your life and you really want to do it, you could certainly do this the manual way. You have to make sure that you ensure that you capture each of these different components that regards to the characteristics of these individual disbursement types and be very cognizant of the information you capture and report. But with the advent of technology, with a lot of money being spent on legal tech these days, it is a great time to be a legal professional because there is software and there's help that can actually streamline and facilitate the capture and the reporting of all this information so you focus on what you do best. But fundamentally, whether you do it manually or through that accounting software, legal accounting software, even better, because it kind of combines the power of your legal aspects of your accounting as well as your business aspects of your firm. But it's equally important to record these events, which are disbursements and expenses that are being paid as and when they happen. That's the most fundamental bottom line to a disciplined expense or disbursement management. And ensure that you capture all the particulars and the characteristics that define that disbursement. Okay, so recording financial records and bank records as close as possible, and this is a standard statement we make. Reconciliation is obviously a huge fear factor, but as long as you can streamline and record what happens in real life and keep it straight and simple and close to what your bookkeeping software needs to reflect, just makes it much more simpler to reconcile at the end of the week, month. You can do it on a daily basis if you like. Okay? So with that, I would like to thank you for your time today, and I'm going to open up the chat window for any specific questions that you may have so that me and my support staff can answer that. please feel free to ask any questions using the chat window. And we do have a survey that would actually be in your email that asks you to suggest. We've also got a lot of suggestions the last few weeks for newer topics that we're going to be covering in the forthcoming weeks, as well as CPD sessions that, through your feedback, we'll be requesting the Law Society. Okay, here's our first question. How do I manage my expenses? Okay, I believe the question, sorry, can you please explain what you mean by expenses? If it's expense book, if that's what you're asking about. You have the expense book right here. Hopefully this answers this question. So the expense book kind of captures the business aspect of the expenses. Okay. This obviously captures by date, by client, the different expenses that you incurred. Roger Jordan, right? Same example. And yes, it does split by HST. So the next question is, when would the presentation be available? It takes us traditionally 24 hours before we can edit and have it available. So you should have this available the latest Monday morning, if not Sunday. And the fact that you've been part of that, you will receive an email with the link to it. But if not, the channel is youtube.com/uLawPractice. And you would find us under our webinar playlist. Okay, I'll probably take 2 more questions before we wrap it up. Okay, we've got one question. How does the analytics differ from the reporting capabilities of uLaw? Okay, that's a really good question, in fact. The reports, okay, the data based on all the information that we've just tracked is the same, right? Whether it's just the visualization and the audience that requires that data that differs. So when it comes to an audit, the auditor is obviously looking for reports, paper-based reporting format, because they're used to a certain way of looking at numbers. So when you're looking at an audit, you're looking at reports and information in a certain compliant, formatted way that you get right out of the product. Now you, as the business owner, obviously have the same need to track and measure all this information, especially when it comes to expense, right? So the analytics is more for the consumption of the actual lawyer. So that's how I would defer it. But the data that's fundamentally residing beneath both that report and the analytics is the same. So if you were to look by expense chart by clients for the month of May, you're going to notice Mr. Roger Jordan, you just had that amount. Okay, so you want to compare that, so it's the same data. Hope that. And with obviously the analytics, you have a visual representation of the data, and you're able to compare and contrast different months, which may be a bit tedious when you do it for a report. Because this is more visual, you get to know right away that, the expense for the month of May, the expense on client was the largest expense you had. Hope that answers that question. I'll take one question for today. Okay, when I transfer my trust funds to general after I raised an invoice, list all the general expenses that I've invoiced in my trust accounting. I can certainly answer this question offline, Dwight, if that's okay, because it does need larger explanation or a little bit more time that I need to walk through that. But yes, the answer is yes, we are able to do that. And I will reach out to you to answer that question. Okay. Well, I'll give it one more minute before I can take the last question for the day. Perfect. Well, thank you very much, and I appreciate the feedback. And I thank you for joining me today and uLaw for the CPD session. And I hope you have a fantastic weekend ahead. And please do join us in our forthcoming webinars, and where we're going to make it a lot more informative. And thank you very much.